You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here. It's Friday. It's noon central. It's time to figure out what the heck is going on in the world of volatility. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which all of you folks are hopefully binging and having indeed a great week. Certainly a topsy-turvy one out there this week. A lot to get to. Remember, if you're just listening to Vol Views, I know most of you listen to the full network, but there is a dedicated contingent who love themselves some Vol Views. I get it. It's a fun show, but you're missing out on a whole bunch of other great content on the network. There are nearly a dozen programs coming at you, so make sure wherever you're listening to this, if you like it, throw a rating, a star, a like, all that helps, and make sure you're getting the full network as well. A lot of great stuff coming your way. And for all of you out there who were bugging us for years until we finally launched it a few years back, we've added additional shows for the hardcores, for those folks who really need it in their veins all the time. TheOptionsInsider.com/pro. Not for everybody, but it's for the hardcores out there. If that's you, you know who you are. TheOptionsInsider.com/pro means you get to come back after this show for a little bit of Options Oddities fun, where we get up to whole sorts of mischief. You gotta tune into that show every week to find out. We had a great Pro Q&A. You like Vol? Mr. Jim Carroll was on the Pro Q&A earlier this week, just tackling every Vol question, every Vol product you could think of. I don't think there's a Vol product we didn't touch on in that show. So I'm guessing you like that. So TheOptionsInsider.com/pro is the place to go to learn more, as we learn who's joining us on the old program today. First, let's go out to, I don't know where he's beaming in from. Is he from the hinterlands of Indiana, the hinterlands of Chicago, or maybe at some far-flung derivatives conference around the globe? We don't know, as we are joined once again by our good friend, the former, once future Dr. VIX, now perhaps Dr. VSTOXX, a.k.a. Mr. Russell Rhoads, also holding court down there at the Kelley School of Business once or twice. Mr. Rhoads, welcome back to the show, sir.
As always, happy to be here. I think I have a new nickname for me. I keep trying to get rid of the once and present Dr. VIX, but how about International Man of Volatility? Yeah, baby!
International. All I think of was Austin Powers when I hear that.
I know. I've got bad teeth.
Oh, behave, sir. Yes. So. A good old Austin Dr. VSTOXX over there. And then also join us, speaking of Austin, from the place that was the Southern Volatility Mecca. I don't know what it is now that RMC has moved on to the mountain region, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how go things in the once and former Volatility Mecca, sir?
It's wonderful here. It's a fine day. It's my kid's first day out of school. So I got the munchkins floating around. They're not so munchkin-y anymore, but I do have them floating around here. And I'm watching the market kind of have itself a nice day so far.
Always fun to have munchkins floating around. I find they're very tasty, the little ones, little donut holes. You can dip them in a nice cup of coffee. A munchkin, quite tasty. As we keep on rolling out there. Also joining us this week, holding down the UVIX hot seat, a newcomer to the program and indeed to the network. He is Zed Francis, the Chief Investment Officer at Convexitas. Zed, welcome to the Volatility Views program.
Thanks so much for having me. I hope everybody's having a wonderful Friday so far.
I think we all are. We'll see. The show is still young. Zed, as a first-timer on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of options and indeed volatility, as well as what it is you folks do at Convexitas.
No, much appreciated. So my career has been mostly spent on the buy side, originally at a long-short distressed hedge fund, then a large asset manager, boutique asset manager. And I said to myself, why the heck do I keep trying to build this business for everybody else? And in 2021, my business partner, Devin Anderson, and I founded Convexitas. The main thing that we think we bring to the table in Convexitas that's unique from other folks is we're bringing truly high investment efficacy option product in what we believe is the correct operational structure, specifically designed for the wealth channel. So from an investment standpoint, how we view things is we start with structural inefficiencies in the volatility landscape. We look if there's a relative value framework to take advantage of those structural inefficiencies. And then we see if we can actually wrap it in a product that would be interested for the wealth channel to actually utilize as part of a portfolio tool. And from an operational side, it's pretty simple. We only do things via SMAs, simply managed accounts, because we think it's the only way a taxable investor should really be utilizing volatility product. And what we're ended up with is right now we operate two core strategies. Our flagship is negatively correlated strategy of the S&P 500. And then we also have a little bit of a fun one on the side because it's just such a very aggressive opportunity in terms of volatility and efficiencies is we do a sector replacement strategy in the semiconductor sector. So a fun week for us with that one with good old NVIDIA.
Nothing going on in that sector at all. With a name like Convexitas, I expected you to have some crazy skew fund in there as well or something along those lines.
We're always long convexity, definitely within there, but no. We're usable tools at a portfolio-wide side of things rather than something that's purely harvesting skew.
All right, a lot of fun to get to this week, as we alluded to. So let's get to it, shall we? It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down what the heck was going on this weekend, indeed is still going on today on the old volatility front. And again, we are heading into a long holiday weekend, so bear that in mind. Always wreaks havoc on the vol space at the end of the day, listeners. Speaking of wreaking havoc, yesterday is certainly a day that wrought a lot of havoc throughout the markets. We saw most of the major indices coming hot off the heels of the name that everyone says these days is the bellwether. Forget the Fed, forget the Magnificent Seven. It's the Magnificent One. It's NVIDIA's market. We're all just living in it. And they kind of knocked the cover off the ball yet again, and the rest of the market promptly fell out of bed. It was a very interesting response. Obviously, there was other economic data going on that kind of undercut everything there, but still, kind of a surprising bit of a head-scratching move. Most of the major indices really turned to the dark side. When we were talking about them on the option block yesterday, they were still kind of struggling to stay flat, dipping slightly into the red. Of course, they closed the day pretty firmly in the red. Now it seems like a lot of those indexes are trying to claw it all back. NASDAQ up 1% right now. S&P up about 0.2%. The Dow kind of the laggard, only up about 0.2%. And small caps, they got annihilated yesterday off, I believe, over 1%. Now up about 1%. So it's kind of a get back day, it seems like, for the market after a bit of a head scratcher out there yesterday. A lot of people thought, NVIDIA, this was going to be, the next leg up, and instead it really took everyone for a bit of a loop out there. VIX coming into the start of the show is right about a 12.15. That puts it pretty close to to where it was this time last week, down about a tenth of a point. So not really a heck of a lot of evolution net on the week. And vol also pretty close to where it was this time last week at a 79, so up about a point. We are no longer back below the 75 level that we were not too long ago, but not that far above it either out there, which again, we're heading into a long holiday weekend. So I don't think anyone expected a banger today, but of course, no one really had what happened yesterday on their bingo card either. So that is the way the volatility market rolls. Listeners, let's go around the horn and get everyone's thoughts. Let's start, Zed, as our guest. You get pride of place. You get to go first. What was catching your eye out there in a very topsy-turvy week on the volatility front, sir?
Yeah, so I actually think the most interesting thing yesterday was the reversal. I think was not exactly easy to call, but it was within the realm of reasonable possibilities. And what I mean by that is we kind of had our last potential good news event, right? We already had our quasi Fed pivot, if you will. We've already had, some okay macro data from the inflation side of things, but it was the last of the Mag 7 and the most important of all of them in terms of the earnings event with NVIDIA. And so where's the next bit of good news going to come from? So the actual intraday reversal yesterday, I think, was a little bit of where are we going to find the next thing to push us higher? And we're just kind of into a quiet period going on. From pure volatility, it is impressive that the market basically nailed NVIDIA earnings specifically, right? I mean, we had options pricing a shade over 8% expected move. We ended up with about a 9. So we'll call it, pretty much on the screws, nailed in terms of expectations. But the real theme underneath everything from an index level is correlation. I mean, we just have implied correlation continuing to just fall every single day. And realized correlation is very low as well. I mean, obviously, yesterday is a prime example of that. Most things in the red, and then, the 5% of the index, NVIDIA up 10%. That is a decent amount of dispersion, driving realized correlation lower, driving implied correlation even lower, driving implied volatility lower. So I think correlation is the most interesting theme year to date, and we'll see if we maintain this incredibly low implied and realized correlation going forward at an index level.
And Zed, as you mentioned, you also have a semi-fund in there. I guess you were too bored with just straight vol. You had to throw a little semi on top of it to spice things up a little bit. Obviously, a pretty spicy week on that front. Walk us through that really quickly. What was going on with you folks and the semi-fund as NVIDIA knocked the cover off the ball, and the rest of the semis kind of followed suit?
Yeah, so what the edge we're extracting in our semis product is essentially we're looking for folks that it's a sector replacement. So they already want to be long the sector. We just think we got a better widget in terms of how to get that exposure. And I think a lot of people have heard of long dispersion before, but what we're taking advantage of to deliver additional upside, a goal of the fund is more than one-to-one upside, one-to-one downside, that positive asymmetry. And how we're looking to deliver that is actually a short dispersion. So implied correlation at the index level, SMH ETF, is just too low. All the implied volatility of all the constituents that create that index would suggest that the index level volatility should be higher than it actually is, meaning that the implied correlation at index level is too low versus actual realized correlation for a sector that's pretty darn correlated outside of a day like yesterday, as you mentioned. So it's a fundamental mispricing and volatility that we can lean on to kind of garner that experience of greater than one-to-one upside, deliver that positive convexity in the semi space. And yesterday definitely afforded a significant amount of dancing opportunities. We were rebalancing the portfolio a lot in the morning, midday, again at the end. So we like days like that. We like days with a significant amount of movement and a significant amount of movement across all the constituents to the sector.
Interesting. Coming at dispersion from the other side. We've heard, the long dispersion. SIBO has been talking it up forever. They announced their product a while ago and then have recently said they have to push that back about a year or so. A little more challenging than they thought to actually create a tradable product around dispersion. But it certainly is an interesting area of the space. And days like yesterday, you're right, certainly provide a lot of opportunities on that front. Mr. Meatball, same question for you, sir. What was going through your mind? We talked a little bit earlier in the day yesterday, but obviously more unfolded as the day went on. What was going through your mind as that sell-off exacerbated? And then what's catching your eye as we roll into the holiday weekend today, sir?
Yeah, I mean, I wrote up that, that we should start calling NVIDIA the vampire, because it just, all of the market cap it gained, it just sucked out of every other major company. Just Apple, Amazon, Google, Meta, Microsoft. NVIDIA was like, I will take all of your gains and they will be mine. Just, and then we had kind of in the morning, it looked like a rotation out of, materials and things like that and into tech. But by the end of the day, it literally just looked like a rotation out of everything and into NVIDIA. In truth, though, NVIDIA was probably just the wrapping paper. And what we're looking at is more of an interest rate story. If you look at the rally that we had in May and then look at the 10-year note, and you wonder, how did we rally? Take a look at the rally in the 10-year, and there is your answer. It was interesting, the range the VIX had on Thursday as low as 1180 to over 13. Now it's giving a lot of that back, threatening that 11 handle again. Might not get there, but we're in a period. This is the longest period of kind of continuous sub 13 closes that we've had in some time. And the futures curve, which I know we'll talk about in a second, is kind of telling us we may be here for a while.
I'm not sure if you checked, Mr. Meatball, but my crystal ball prediction says we will get to 11 handle by the end of the show, if just so barely. So we all know how precise that is. So we will be there by the end of the show. Mr. Rhoads, sir, the last thought is yours. Obviously, a tumultuous, a topsy-turvy, some might say a surprising week, kind of coming into the long weekend now. Seems like things are maybe not on the underlying movement front, but from a volume and everything else front, maybe quieting down a little bit. What's catching your eye out there this week and indeed today, sir?
Yeah, I think a lot of people are taking a look at what the market's doing. And I remember being in the Eurodollar option pit on a Friday before a Memorial Day. And the guy I worked for, just who never would move, told me never to hold a paper, never do anything but look at the market, be very focused all the time. He just looked at me and goes, I'm sorry, screw this, I'm out of here. And I have a funny feeling that there might be a lot of that going on trading desks right now. We got all the news that we were going to have behind us. The two guys that just went before me, the two things that I had scribbled down were talk a bit about NVIDIA and how well they priced the outlook and how little VIX has done this week. And that's kind of what we just heard from Mark and Zed was, the NVIDIA. I was kind of surprised that because NVIDIA, I believe it rallied like 16% or had a really big move the last two times, had big outlier moves. I was kind of surprised that the at-the-money straddle was pricing around 8%. I would have expected something much higher. I checked in on it, about a half hour before the close on Wednesday and saw that it was priced like, it's always priced, not overpricing based on a couple outlier moves. So I just got out of the way on that one. I didn't feel like there was enough juice, as Mark likes to say, relative to selling options in front of NVIDIA's earnings. And I passed, and I guess I was pretty smart on passing.
Yeah, a lot of our audience passed as well. We asked them at the beginning of the week that exact same question. We said, the at-the-money straddle in NVIDIA at the time was trading for around $78. We crunch all that data with Matt and his team over there at Rhoads, have been doing so for a long time. So we have a long earnings history for NVIDIA. And that comes out to about $10 more than the stock has averaged in terms of movement over the last few cycles. So we asked our audience, $78, a little more than they've moved in the past. Is that too cheap, too expensive, just right, or are you folks getting the heck out of Dodge, not touching NVIDIA at all? And that was the answer. Exactly 50% of our audience said, yeah, we want nothing to do with this beast. 31% came in on the other side of it. They said it was too pricey. $78 was too much, which we all saw intraday was not the case. I think it moved well over 100 handles So $78 at the end of the day was probably too cheap. Not enough, and Goldilocks just right came in tied for third at 9.5%. So our audience, for the most part, staying the heck away from NVIDIA, but the ones that were playing said it might be a little bit too much, which is kind of, I guess, if you stayed close and stuck to your guns throughout the entire day, maybe you could have come back in and scratched that by the end of the day, but a rough one. You had a challenging day out there. Again, you sell premium NVIDIA these days at your peril. As we keep on rolling out to the land of the volatility surface, as we roll into the start of the show here, May has, of course, rolled off the board. June sliding into that pole position now. Down a little bit as we kicked off the show. Not a ton, about almost a quarter of a point in that June future. And July down, as you can guess, even less, about 0.15 or so coming into the start of the show. I'm sure if we rack those now, we'd be down a little bit lower out there. But at the end of the day, not a huge evolution week on week on the volatility surface. Zed, I'm sure you pay a lot of attention to the term structure of volatility out there. What's catching your eye this week in the volatility futures?
Yeah, so it really comes back to that commentary I had on correlation. I think the most interesting thing going on in index volatility is, yes, spot correlation is incredibly low, driving at the money options to be pretty darn low in terms of implied volatility. But what's way more interesting, in my opinion, is how flat skew is, right? The puts are cheap relative to calls in comparison to historical pricing positioning between those two things. And what that really is saying is that downside correlation is very, very low. So the market's saying, like, if the market goes down 10%, 15% over the next month, do we think realized correlation across all the components of the S&P 500 is going to be high or low? And I think most people would say if we went down 10, 15% a month, that we're probably pretty darn correlated, that's how we got there. Everything went down together. That is not what the options market is saying at all. Downside implied correlation is very, very low. So I think it's a very interesting environment when you look out the curve, especially downside out the curve, that the market is expecting, even if we have a significant sell-off, that what we have been experiencing, where a handful of names go up and a lot of the names go down, is the path we get there. And I think that's a little bit of an oddity, as most folks, again, during corrections, think correlation drifts towards one.
Ah, yes, the old saw. When it all hits the fan, correlation goes to one. We do hit on correlation quite a bit on our This Week in Futures option show, where we talk about correlation across a variety of different asset classes, ranging from FX to crypto to ags to metals, you name it. Don't get into it too much here on Vol Views, but it is an intriguing topic, especially now that everyone and their mother seems to have dispersion on the brain these days. Correlation, obviously a big part of that. Mr. Once and Future Dr. VSTOXX. By the way, the chat not a fan of your blue language, sir. So you got to tone it down. And also, they're not a fan of your newly minted nickname, International Volman. They say it sounds like a mix of Captain America and Austin Powers. They're not down with it. So you're 0 for 2 so far, Mr. Dr. VSTOXX.
Sorry about the F-bomb. I still I can still blame the head injury on that one. It's kind of fun.
That's what editors are for, sir.
Yeah. So just I find it pretty darn interesting with respect to just the curve. It looks like it's going to be the summer of love, man. There's nothing boiling up in the world that would make anybody think that we might get a spike of volatility at any time in the near future, right? Everybody's getting along beautifully. Around the world, it's not like we're dividing ourselves into two different groups that look like they want to fight any moment, and two different groups that are economically dependent upon each other. Becoming less and less so, but economically dependent on. We're still a little bit dependent on China, but we continue to try to decouple ourselves from them. I think there might be some sort of breaking point where we really do get into. Right now, you could say we're in a simmering trade war with them. I wouldn't be surprised if that gets stepped up, and that maybe is negative for their stock market, negative for our stock market as well. So there are just too many potential landmines out there for the VIX curve to be as flat as it is right now. That's, I just, and it's giving you opportunities. And I came across one of my favorite trades when we talk about VSTOXX, as far as VIX being low, VSTOXX being low, and giving you opportunities to maybe put on a position that will do well if we get some sort of bout of volatility this summer.
Spoken like a man who is heavily short the S&P, sir.
I'm in so much pain.
You must have loved yesterday. It's like, oh, it's all coming true.
Hence the salty language.
It's all coming true. My prediction is coming to pass. The worm has turned at last. That's what you were saying yesterday, right?
Yeah.
Let's go out now to the land of Austin again, where he is busy chasing the munchkins around the sweltering, not really desert, but let's say hard scrabble land of Austin. Mr. Meatball, sir, what's catching your eye out there on the vol surface this week?
Yeah, it's pretty darn tight. May rolled off. June is trading at about 1.3 points over the cash index. About in line, maybe a little bit tight, but about in line. July has a tiny little bit of a bid in it, and then we still have that October futures bid in there, which I'm not sure is fully deserved, but that trade is still floating around out there. The curve is holding up. I'm interested to see if VIX continues to fall, if the futures fall with it, or if they're pricing in a continued drop in the futures or in the cash index as the day progresses.
Speaking of VIX, let's get to it, listeners. A little bit of the old VIX options. What's cooking in the mothership? And it was a banger week, hence the ADV getting some of its mojo back this week. 821 is the ADV in VIX right now. Still close to 100,000 contracts below where it was at its peak a week and change ago. But above also where it was this time last week, up about 47,000 contracts net on the week. When you see me breaking down the numbers in a little bit, you'll see why. Today, not exactly contributing to that ADV resurgence, though. 228,000 contracts on the tape. As Russell was saying, everyone's kind of already fled the pits, and they're heading for wherever they're going for the Memorial Day weekend. No one's hanging around to sling some VIX options, hence this pretty much anemic number out there today. Let's see if things are anemic in the top 10. Remember, May, you're kind of rolling off the board. Let's see what's hanging out here in the OI as a result. Cost you 172,000 contracts to break into the top 10 in VIX land today. That's not nothing. It's not blowing the doors off either. That gets you to the July 45, so kicking things off with a gusto. By the way, we are still 9-1 calls over puts in the top 10. I'll let you play the Where's Waldo, where that put is. You have to wait a little bit this week. Number 9, 173,000 of the June 14. So all things considered, June 14 is pretty darn reasonable compared to certainly number 10 and then number 8, right back at it, 183,000 of the June 45. So if the July 45s weren't floating your boat, allow me to present the June 45s. Then number 7, if you were waiting for Waldo, you found him here, listeners, 207,000 of the June 14 puts, the first and only put on our list as we continue to plumb new depths out here in the vol space, and nobody wants to line up a ton of puts. Again, some of that is structural. Obviously, there are fewer strikes left to do that in now as we continue to get lower, but also just no joy to be found in put land. Number 6, 217,000 of the June 18s. Number 5, 222,000 of the AUG 47 halves. Number 4, 254,000 of the June 20s, 2Os. Number 3, 275,000 of the June 16s. Number 2, 285,000 of the June 35s. And rounding out the top 10 this week, the number 1 size position in all of VIX options, 422,000 of the July 20s. I think you're going to see in a little bit how those made their way into the top 10 this week. But before we get there, we need to play the song that's so nice we have to play it twice. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
I'm not going to lie, Mr. Rhoads. That is the true reason you are on the show. It gives us an excuse to play that song.
I know. Yeah. And that was the moment that we lost Zed.
Yes, he's like, what is this show I have come on? Is this some crazy game show from the 70s?
In the world? I remember watching when I was trying to learn Spanish, I would watch Spanish TV, and there was a Spanish game show where they had Mr. T on talking through an interpreter. It was a Mexican show, talking through an interpreter, and they're putting him through all these stunts and everything. And at one point, he honestly almost gets hurt, and he's like, "What am I doing here?" in English, and they didn't repeat that in Spanish. But I think that's what's going on with Zed right now.
I think Mr. T loses some of his luster through a translator. Kind of hard to translate. I pity the fool.
No, it was funny because I liked hearing what he was saying in English, and if you think I was salty earlier, he was very salty.
Allow me to distract you for 1 second since you brought up Mr. T. The last time I was called to jury duty, I don't know, 4 or 5 years ago, it was out in the hinterlands of Chicago, and I went and did it. You know, no one enjoys jury duty, and then I ended up leaving. I saw somehow online or in the paper, literally the very next day in that exact same jury room, Mr. T was called in for jury duty. He was taking pictures with everybody. I missed Mr. T on my jury duty by one. How great would that have been to have been on a jury with Mr. T? That's a story for a life, and I missed it by 1 day, sir.
I pity the fool who doesn't vote to convict.
I know, exactly. Can you imagine the deliberation with Mr. T?
Yeah. What's your prediction for the trial? Pain. Okay, Monday, VIX was at 1245. Somebody using the June 5th options. They bought 129, nice number here, of the June 5th 15 puts, sold the same number of the 13 puts. Net cost of $1.54. They'll make 46 cents off of this as long as VIX stays under 13. I think that's the trade I don't like this week. Tuesday, VIX at 1209. Somebody I do kind of like this one. Somebody bought 300 of the June 12th, 1250 calls for $1.51. Sold 3,000. It was 3,000 of both of them. The June 12th, 18 calls for 31 cents. $1.20 cost, break even at 13.70. I think that's I kind of like that trade. We do have a couple of, whenever we're early in a month, we've always got the employment number. So, we do have something that might get volatility going between now and then. And then Thursday, somebody came in, and this is, and Zed and I were talking about this before we all got going here. I find it unusual, but this is the third or fourth week in a row that I've been on, and a big portion of the trading has been in the May 29th options, and in the May 29th calls, and we're talking about bullish volatility trades on the Memorial Week expiration, which just makes me, is there a lot of concern about the upcoming 3-day weekend? I don't know, but we have seen a ton of paper in the May 29th. Maybe it's because it's the end of the month. And this was an opening trade. Somebody bought 12,500 on yesterday, 12,500 of the May 29th 15 calls for 28 cents and sold the same number of the May 29th 20 calls for 5 cents. This is bigger than the open interest. It's not an exiting trade. And they paid 23 cents for this. So somebody's betting on a volatility spike between now and, 8:30 a.m. Central Time in Chicago on Wednesday next week.
Yeah, you don't see a lot of buying into holiday weekends. You're right.
Yeah, and definitely something I wouldn't, I wouldn't have, unless you've got a hotline to the Kremlin and he's going to do something else, or Taiwan, the Chinese circling Taiwan for military drills, and maybe if that one goes awry, who knows? I got to start looking at some positive things. I am going to go get my puppy. All right, I'll be back after I get my puppy to sit in my lap.
Or a few, shall we say, flashpoints around the globe right now. You never would know it, you're right, by looking at the VIX curve out there. Let's get to some of the VIX options, and I want to get everyone's thoughts on some of the paper. Russell broke down some of the weekly stuff already. Let's get to some of the rest of the size paper this week. And there was some outside of today. Today, only 228,000 contracts on the tape. The big dog, just the June 14 calls, not even 12,000 of those. So not really worth getting into today's paper unless you're really excited about 11,000 of the AUG 18 calls for number 2. Yesterday, though, as you might expect, a banger. We, of course, started off firmly in the green, everyone feeling that NVIDIA euphoria. Then as the day went on, the worm turned and things got blood red and everything finished off aggressively in the red, and that usually equates to an interesting day on the vol front, and yesterday was certainly no slouch. 1.12 million contracts on the tape. The big dog, and I want to get your thoughts about these in a second, Mr. Meatball, 252,000, so over 250,000 of these July 20s. Interesting. Going up in a bunch of different blocks for a bunch of different prices. Looks like the block that kicked things off, listeners, was 16,000 for 64 cents, kind of lifting the offer, which shows that maybe they were looking to buy, or maybe they just wanted to clear those out of the way for the other almost 250,000 that were to come. And then a little bit later, they traded about 75,000 of them for 66 cents. That would have been obviously through the other offer, and they obviously moved the market after that initial trade. They went out then 65 at 70. They said, how are they now? Bam, 75,000 for 66 cents. And they kept trading throughout the day, including at about 3 o'clock. They traded another 57,000 for 86 cents. So these things all over the place. Obviously, VIX getting a little bit frothier towards the end of the day there as the latter kind went up. But July 20s for prices from about 64 to 86 cents. You like those, listeners? Are you a buyer or a seller at those levels? Number 2, we have the July 18, 65,000 of those for number 2. Number 3, 45,000 of the June 12 puts. So there we go. We have some puts sneaking into the top 5 on Thursday. It's not enough to make it into our overall top 10. Number 4, 40,000 of the June 16s and rounding out the top 5 on a pretty active day. 34,000 of the June 14 calls. A Wednesday, also a banger, 935,000 contracts on the tape. The big dog, 51,000 of the June 16s, followed by number 2, 43,000 of the Aug 31 calls. You don't see a lot of 31s hitting the tape, but Wednesday was the day for it. 35,000 for number 3 of the July 45s. Number 4, 33,000 of the June 22s, and rounding out the top 5 on a pretty active Wednesday, 33,000 of the July 15s. Tuesday says, don't forget about me, 996,000. So one day over 1 million and 2 days threatening 1 million this week, listeners. The big dog on Tuesday, 74,000 the June 14s, followed by 50K of the June 15s, 44,000 for number 3 of the May 12 puts. Again, 12 puts coming in. You like those, listeners? Number 4, 41,000 of the May 12 half calls, and rounding out the top 5 on a pretty active Tuesday, 40K of the May 13s. And you know what? Monday, no slouch either. Monday says, hold my beer, kid, 980,000 contracts. So we were at or threatening 1 million pretty much every day this week, with the exception of today. Today is obviously the runt of the litter. 980,000 on the tape on Monday. 65K for number 1 of the SEP 30s. 3 O's, right back to the SEP upside, followed by number 2, 65,000 of the SEP 19 puts. Do we have another one of our funky collars? We talked about these a few times recently out there in VIX land. They don't really go up that often, but there is a use case for them. And skew-wise, VIX certainly lines up favorably for collars. Number 3, 40,000 of the SEP 13 puts, maybe a bit of a vertical there. I think we talked about this a bit on Monday on the option block. Number 4, 38,000 for number 4 of the May 13 puts, and rounding out the top 5 on a pretty active Monday, 36,000 of the June 19 calls. Zed, I'm curious for you. You're obviously watching the tape on a variety of products. How big of a driver is VIX options flow to you guys over there at Convexitas? And if it is, what, if anything, caught your eye this week, sir?
Yeah, so everything we trade is fixed rate vol. So, SPX contracts and on the index side of things. But we definitely pay attention to what's going on, especially in vol, just for more of like a signaling mechanism. So, like a month-ish ago when we got our first, we'll call it geopolitical sneeze, and that Friday, we had a pretty significant pickup in all kind of second derivative risk pricing. Then that feeds into our thought process of how we're going to adjust the portfolio. And it continues to be interesting how quickly those types of events get instantaneously de-risked by Monday morning following that geopolitical weekend. Risk was instantaneously basically gone, all that pricing in there. But we really use it as more of a signaling mechanism to think about how we should be adjusting our book in fixed strike world of SPX options.
Mr. Meatball, last but not least, a lot of paper going up this week. I've just checked while he was talking. Looks like that was the other way on that risk reversal on Monday in VIX, maybe selling the 19 puts and buying the 30 call. So bullish risk reversals pretty wide Don't see those too often. And VIX and the 19 put certainly an intriguing choice out there as well. Looks like they also did one of those synthetics against it as well. It's like the 15 calls were in there as well. So we got some of those, another one of those funky synthetics versus the risk reversal. That's kind of been the trade du jour, and mostly on Mondays, it seems like these days, which is kind of interesting. Any thoughts on that, Mr. Meatball? And also, what are your thoughts on this, shall we say, explosion of July 20s that hit the tape yesterday?
Yeah, I mean, that's a pretty aggressive amount of buying. It's open interest in VIX had been relatively low. This has moved open interest pretty back toward the norm. Volume outside of today, pretty decent this week. Plenty of action, plenty of people playing both sides. But yeah, those Julys, there's just a ton of open interest in July itself. Obviously, the 20s. But you got the 18s that are really active have been active, and they're starting to build some positions on the 16s and 17s. June, yeah, I mean, but you look at the June and July 20 calls, and you've got over 600,000 open contracts there. The 18s, you've got almost 400,000. So we're looking at a now that vol is low. Traders feel like it's okay to hedge using VIX again, and thus the big uptick in reasonable calls.
Reasonable calls indeed. Let's see if anything reasonable is afoot beyond these shores. Shall we, listeners? It is time for the International Volatility Review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro STOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the International Volatility Review, where we look a little bit farther afield. As Mr. Rhoads alluded to, there are some events popping off beyond these shores, and they tend to have an impact, whether for the good or for the bad, out there on the volatility front. In particular, looking at a product like VSTOXX coming into the start of the show, listeners, we had VSTOXX at a 1261. That puts it up nearly half a point, 0.48 to be precise on the week. Remember, not that long ago, we were threatening new 52-week lows. The 52-week low is about 1212 in VSTOXX. That was from December of last year. We got pretty darn close right before all of this madness. I wouldn't be surprised if we were a point or 0.01 away from that 52-week low. But now, of course, 1261. Of course, if what the vol surface is predicting comes to pass, we might be threatening that low again. The high, of course, 23 1/3. That came in October of last year. So a lot going on. Mr. Rhoads, when you're not talking to us, you spend a lot of your time crunching the numbers over there on all things VSTOXX. What is lighting up your tape and indeed your research these days, sir?
I would almost use the word dimming my tape as opposed to lighting up my tape. Man, VSTOXX was in a tight range this past week. If you take the 5 closing prices, and it has closed, so 1260 is the close on Friday, we have a whopping 30-cent range in the closing prices for VSTOXX this week. Monday was the low at 1244. Wednesday was the high at 1274, and we've just stayed within that range. The front month future, which is now now June. May went off the board for both VIX and VSTOXX on Wednesday. That range has been 20 cents this year. All right, not this year, this week. And the spread between the two is varied by about 25 cents or so. So it's a pretty quiet week as far as VSTOXX goes. But when we have quiet weeks, it creates opportunities to prepare for the next volatile week. And one of the papers that I've written for VSTOXX involves systematically using systematically selling a slightly out of the money put and buying a call spread on a pretty regular basis. And somebody came in and did that 1,000 times today using the June VSTOXX contracts. And this would actually be one of the days that I'd be looking to do it, the Friday after the previous month's expiration. So with the June VSTOXX up at 1370 yesterday, we had somebody sell the June 13 puts for 50 cents. They bought the 18 calls for 33 cents, and they sold the June 25 call for 10 cents. One of our favorite trade structures on Vol Views, I believe, and the result there is a 27-cent credit, which they profit. That's their minimum profit as long as VSTOXX is above 13. Between now and June expiration, they can get a really nice pop, make about $7 or so if we get a volatility event and we're up in the 30s. I did do one of the things I like to do with trades like this, and estimated what the prices would be each of the next Fridays between now and June expiration, just because we all know if you do get that pop in volatility, that you should be taking a look at monetizing it and not necessarily trying to hold it through expiration. But I like that trade structure. It's fairly cheap. Even if VSTOXX just moderately hangs around in the 13 range, this trade's definitely going to be okay. But definitely a cheap way to get some upside exposure to VSTOXX. And I historically, the front month VSTOXX future has been more reactive to global volatility events than VIX, and it is at a slight premium right now to VIX. But I do think you're being given some opportunities to get long volatility in a part of the world that is closer to a lot of the problems than we are right now.
Look at you driving paper flow with your research, sir. Putting out a research paper on risk reversals and then bam, somebody slinging thousands. Look at you, just the puppet master.
Yeah.
Driving all the flow. That is interesting setup. Obviously, you're right. That kind of dovetails with some of what you're talking about on the VIX options flow as well. Some folks out there are clearly setting up or hedging against something popping off out there in the next, shall we say, weeks to a month and change out there in June. And it's funny, we don't see a lot of bullish risk reversals, and yet you just talked about one. I just talked about one going up on Monday and again last week as well. So all of a sudden, it seems like it's bullish risk reversal season, Mr. Rhoads.
Mm-hmm. Yeah, and I'm going to update these numbers because I think the last expiration that I have when I tested these out and found out that you don't really lose money if you put this type of trade on over a long period of time. You might get hit every once in a while if we get a really bullish move in the EuroStoxx 50. So I think the trade structure we're talking about here is very, very appropriate if you're trying to guard against some sort of short-term violent drop in the underlying market through getting long volatility. Because what would really hurt the volatility side of this trade is a very bullish EuroStoxx 50. So that's one of the reasons I like this structure. I've always looked at the structure independently. I probably ought to take a look at what if you apply 1% of your portfolio, but how does that help as well? Logically, I would say it's definitely going to help because it's definitely a way to have long volatility exposure without really losing anything.
I know last week you were worried about getting the flip on in your VIX versus VSTOXX trade. Did you get that off, sir?
I did not.
So tell our listeners again really quickly, which side of the trade are you on right now?
Right now, with where we're at, I'm long VSTOXX. I'm long VIX and short VSTOXX. And I'm still working some kinks out of the system. I keep talking about it, and then I keep going back to the numbers, and I got to just stop going back to the numbers and write that sucker up. But I went all the way back to 2014 and looking at getting, 150, 160 points out of the market over a very long period of time with not too much drawdown.
If that VSTOXX risk reversal guy is right, you might want to get on the other side of that trade.
Yeah, I know. Luckily, we tend to when we get the big move in one of them, we get the big move in the other one. It's kind of interesting to look at the individual leg profit and loss. There are like losses of 15 points on VSTOXX and making 14 points off of VIX. They do move that closely together. If you only looked at one leg of it, you'd probably get very freaked out at the choppiness. But the correlation between the two, the way that the two move together, tend to drift apart around anticipations of things, and then move together during reactions. So if you've got VSTOXX moving higher relative to VIX because we got a Brexit referendum or something like that, they tend to come back in line with each other. And I think that's one of the cores of trading the spread between the two.
Fascinating stuff, listeners. If you are intrigued, you should be checking out Russell's research. Look, he's driving flow in VSTOXX as we speak, listeners. And again, if you're looking at some of these international flashpoints and thinking maybe something could pop off there, something to the upside in a more internationally flavored vol product probably wouldn't be the worst thing. But now we have to turn our attention to some of the other vol products out there on the domestic front, including on the vol ETP side. Zed, I'm going to go out on a limb and guess if you don't pay a ton of attention to VIX options, then maybe the legion, the myriad of vol ETPs, the inverse, the 2x, the 1.5x, all that fun, not really on your radar, Zed?
They used to be a fan favorite of mine way back in the day when the options market was pricing in the forwards of these products inefficiently, that there was some fun things you could do in term structure trades. But these days, the market is much more efficient. And yes, my life is way more in SPX fixed strike than in these types of products.
You're right. It used to be a lot more fun in some of these products. You can get out longer term in some of these things. It wasn't as crowded of a trade, and you could really do some fun. And you're right. These days, folks have grokked to that a little bit more. Not quite as easy as it used to be out there. SVIX. So, if you just bought SVIX this year, though, you're doing pretty good. It was at a new all-time high not too long ago. To get there today, got close to there today. 47.60 is the new all-time high. 47.60 out there. At about a 47 even right now, up about half a point. Today, hitting its ADV, which is not that much. It's still only 4,000. So SVIX can't get out of its own way from a options volume perspective. From an underlying perspective, continues to set new all-time highs. At a certain point, you got to wonder how much higher can it go? There is a ceiling to this, after all. VIX has a floor. So intriguing stuff out there. If you're wondering what the big dog is out there, it's 1,700 of the June 45s. Those sounded kind of ridiculous not too long ago, and now they are in the money. I wonder if that's our buddy, Mr. Chris Sidial. In the past, he has been loading up on a lot of far out of the money SVIX. I don't know if 45 is a bit of a bridge too far for him, but working right now. UVIX 610 down 0.2 of a point, 15,000 contracts on the tape today. So kind of a light day across the board for all these vol ETPs. The ADV on a pretty banger week is down actually 4,000 contracts to about 22,000. UVXY 20. Oh, by the way, the top position in UVIX, the one puts. 4,800 of those expiring in 2026. We joked about these before. I don't know why the hell you're buying those. 2026, I mean, you're guaranteeing yourself. There's going to be multiple reverse splits between now and then. You're guaranteeing yourself a vestigial position you will never be able to get out of by the time you unwind it. But hey, enjoy that. UVXY 2480 down 0.6 of a point. 46,000 contracts on the tape today against an ADV of 42,000. So that's moving in the right direction. The big dog position in UVXY, now with the reverse splits and other I don't know which ones are pre-reverse split and which ones aren't. These are about 15,000 of the June 8s. So these are probably pre-reverse split, I would imagine, if the 8 calls are still the big dog. And then VXX rounding out the tape, 1120, down about 0.8 of a point. 38,000 contracts on the tape against an ADV of 62,000, which in and of itself is down 7,000. All right. That's our run through the vol ETPs. Mr. Meatball, sir, an intriguing week. I know you've been long SVIX in the past. Is that still the case, or is it getting a little top-heavy for you out there? And then what else you got catching your eye out there in the vol ETP, sir?
I have closed my SVIX. I'm going to reload in a little, maybe next week. We'll see. I do have, because I've got on a bunch of short UVXY with everything happening. So I've just swapped out short vol for short vol. Let's just put it that way.
And how are you getting back in? You're going to be selling puts? So what's your MO?
In SVIX, I'm probably going to sell puts. You do get some pretty decent juice out of the puts. I'd love to get in it so for instance, the July 35 puts are probably like $1.50. That's not a bad little yield to get long below $35 a share. If I want to, there's a pretty decent, what's interesting is like this has a pretty decent downside curve. So you're getting some real nice juice if you're willing to sell. Probably get over $1 for 31 puts. To put things in perspective, those are like 100% volatility. That's not terrible.
I had Jim Carroll on the Pro Q&A this week, and someone asked him about selling puts in SVIX, and he said he just can't wrap his head around it because he still has February of 2018 in the back of his brain. So he's still terrified. He won't sell any puts in SVIX. Or what do you say to that?
I mean, it could happen. They have a lot of controls in place to make sure that it doesn't. But nothing is completely out of the cards. I don't think we have enough interest in VIX futures for that to become a problem. The ADV on SVIX is, the ADV on SVIX is 430,000 shares a day. The VIX futures market is plenty big to handle that. So if that volume, you add a couple of zeros to that volume, now we're in an area where you start to get concerned.
And Mr. Rhoads, I'm assuming you said you were mostly out of SVIX at this point. Are you getting back in? Are you selling puts to do so? What are your thoughts on what Jim Carroll was laying down about being too scared to sell puts out there? And anything else catching your eye in the vol ETP universe this week?
No, I still own what I owned when we talked last week. I have a very small position in it right now. I would like to see it around 42 to add. You were talking. You said how high can this thing go? You got to remember that roll yield benefits them a bit. So VIX could sit perfectly still, and that thing could just keep grinding higher for some time. It can do that. I'm surprised Jim said when you said that Jim was a little worried about the February of 2018 thing repeating itself. I've often said, one of the things that we all have in the back of our mind with SVIX is they do own some out of the money calls. But I'm looking at this, and they own 38,700 of the June 24 calls right now. Collectively, between June and July futures, they're short 13,000 futures. And there's not a one-for-one relationship between the options and the futures there. So they're really only like a third hedged with those calls.
Yeah, we did bring that up. And he pointed that out.
I'd always had in the back of my mind, well, they're buying calls. So, but if I hear Jim say something like that, that makes me start looking at some numbers. And yeah, even though they've got those calls, that still wouldn't have saved. If we had a repeat of February 2018, I don't think that would save them.
Yeah, we did bring that up to him, and that wasn't sufficient to deter his risk aversion for SVIX puts. Just an intriguing nugget, listeners. If you missed the Pro Q&A, if you're not on the pro side, that's the kind of fun talk you're missing. As it's time for all of us to get fun and perhaps dangerous, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everyone, welcome to the crystal ball as we're coming up against it here for the show. And the Rock Lobster tried to claim an early victory, even though he scummed me by 1/10 of a point last week on the show. I was at 11.95. I had a bullseye, I believe. I went first. I was at VSTOXX. I was trying to keep that spread the same at 12.03. No joy on VSTOXX at 12.61. VIX was looking good. I said at the top of the show we will be below a 12 handle. Alas, that is not coming to pass. 11.95. If we're at 12.08, if I wait a couple of seconds, maybe I'll be at another bullseye, 12.05. The Rock Lobster was below me at 11.85 in VIX and 11.99 in VSTOXX. And Mr. Rhoads was feeling a lot more downside, 11.60 in VIX and 12.20 in VSTOXX, which you probably would have been there if it wasn't for the reversal we saw yesterday out there. So a long way around to saying no winners, but I will keep open the line for mine if we get there by the end of the show. But Zed, a long way around to saying no winners this week. So you get the dubious honor of going first. I'll let you just pick VIX. You don't have to go VSTOXX. What are you feeling for VIX at the close of showtime next week, sir?
So we'll go with a little bit of increased volatility optimism as we roll off from the heavily micro back to the macro world as earnings are basically done at this point. Along with maybe we get a little bit of fun with month-end rebalancing after a pretty spectacular month for risk assets. So I'll go ahead and say up 150 basis points week over week for VIX. So we'll say 13.6. How about that?
Very well done, sir. Good job on your first appearance here on Vol Views. And since we are coming up against it, that music means we are running out of time. If folks are intrigued, they want to learn more about what you and the team have going on over there at Convexitas, where should they go? What should they do?
Yeah, just convexitas.com is where you can find a little bit of an overview for yourselves, or you can find myself, Seb Francis, or Devin Anderson, my partner, on LinkedIn, and reach out to us anytime.
Yes, thank you. Check them out, convexitas.com, and thank you for buying me enough time, Zed, because now 12:04 in the VIX. That puts me within our 10th of a point margin of victory. So crystal ball bullseye for me. Winner, winner, chicken dinner. I believe that's 2 weeks in a row. Got to look out, listeners. Starting to get precise on this. So not so much on the VSTOXX yet. Haven't dialed that in. But getting closer on the VSTOXX side. So I'm going to go last because I went first last week and I got scummed. So I'm gonna scum somebody else this week. So Mr. Meatball, how about you go next, sir? What are you feeling for VIX and VSTOXX next week, sir?
What did Jed guess?
13.06. He was feeling a little bit of juice.
What, 13.56?
13.06.
13.06. Okay, I'm with him. I'm picking up what he's putting down. And I'm going to go, well, I think we will be higher earlier in the week, but maybe they turn around the other way. So I'm going to say 12.21.
You feel daring for VSTOXX, or is that outside of your purview still?
Sure. VSTOXX will be 13.31.
Ooh, 13. Wow, you're getting in. You're kicking into the... Of course, the palindromic does limit you.
It does.
And if folks want to know more about the land of the pit, where should they go? What should they do?
Yep. Just follow me on Twitter at OptionPit, and you'll see everything I'm up to. It'll be worth your time. Come and check it out.
Come and check it out, indeed. And Mr. Rhoads, last but certainly not least, what are you feeling for VIX and/or VSTOXX next week?
Oh, goodness gracious. I'm going to go for 1180 with VIX because I just don't see a whole lot happening next week. And we also, more often than not, stocks tend to act pretty good into the end of the month. And next Friday's the last day of the month. So I'm going to go kind of low on that one. And I'm going to go 1240 on VSTOXX. That gives enough room for other people, doesn't it?
Yes, it does.
Because they were much higher than that.
Yes, it does. Including myself, sir. I will go last. And I was typing as you were talking, just so I don't think I was scumming you. 1165 to the downside for myself. So a little bit higher than you were last week, but obviously below where I was in my bullseye prediction for this week. And VSTOXX, I'm going 1215, so 0.4. Is that enough, listeners? I don't know. I'm curious. What are your predictions on VIX and VSTOXX next week? Of course, that music means we have come to the end of another epic journey through the world of volatility. If you're on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us. Have a great holiday weekend out there. If you're on the pro side, of course, come back in a little bit. The Rock Lobster will be very mad that I indeed won the crystal ball and he did not, so I'm sure we'll be hearing some umbrage from him on Options Oddities coming up in a little bit, exclusively for our pro folks. If you want to check that out for yourselves, theoptionsinsider.com/pro. A long holiday weekend, a good chance and a good time to come check it out. A lot of great content coming there, including all of our OIC stuff going there before it hits the rest of the network. And of course, if you want to check out everything we were talking about today in terms of VIX versus VSTOXX, Russell's research that is driving all this paper flow out there in VSTOXX, and anything else, eurex.com, EUREX.com, or just go to stocks.com, STOXX.com. That'll get you straight to all the VSTOXX fun. And again, have a safe, a fun holiday weekend. Remember, no shows on Monday. We are off for the Memorial Day holiday. We'll be back later next week with our usual array of shows, including the Option Block and TWIFO on Thursday, and then Volatility Views next Friday. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.